All right. All right, so we got 12 people in here. Might as well start. 13, 14. I'll wait a couple more. Nothing more awkward than like the first few minutes of every Zoom where you gotta be like, oh, some people trickling in here.
Hey, Howard, how you doing?
Yeah. So lamb and rice. Let me give you a story.
Here's your birthday girl. Can you get a puppy cam?
Yo, she had a really big morning. Can you see? She's out. Sure, he's dead over there. So yeah, she's been snacking all day.
Snack. Treats for the birthday girl.
So yeah, I went to the dog store, spent like $130 on treats. It's like living. That's living right there. I know, in this economy.
Yeah, right?
There you go. Load it up.
That's
All
it.
right. All right.
Cover
Let's start chatting. We're running out of time here. 40 minutes we have to go. So I just kind of wanted to bring everyone in. It feels like, the chat's not as popping as it usually is because just, that's the dynamic of the market. There's not a ton of trade setups, especially from a technical point of view with what we're seeing out of, the broad market, the SPY, the NASDAQ, the change of leadership. One day we'll see tech strong. Today we're seeing the Qs with some relative strength. Things like that, where it's just, we're not going to be as active and we're not going to see that activity anytime in the short run. So I just kind of wanted to, bring everyone together and kind of talk about market ticking highs and hot sells pump. Love that. Just kind of where my thoughts are and what I think is going to happen and kind of like what I think we should be setting ourselves up for, what should we set, and right now, the thought for me is that everything is obviously on inflation. And the shitty part about that is that now we are just kind of slaves to that CPI number. So, we know the Fed's going to raise rates like crazy. They got a July meeting next, they got a July meeting next. They're going to raise rates again, like big time. But that doesn't really matter until we see the CPI number come down. That's the most important, number in the market right now. And there's really like nothing that's going to stop this market from tanking until we see that number slow down. So if we get next month's number in and it comes in even higher than last month, 8.6, we get it like 8.8 or something, it's going to be a shit show for the following month until we start to see that number come in. And, the unfortunate part is, that's the kind of dynamic of the market. Sometimes it just needs to see inflation come down. And that's the only thing we're going to hear about. It's the only thing are you going to hear about is supply chains, the Ukrainian war on Russia and how that's affecting oil, how Germany is so dependent on Russian oil and they have to keep buying more and they're going to pump the price. We see oil come in a little bit. That was on the bill that I didn't get a good chance to dive into this thing that Biden was putting together. It'd be some sort of concession at the pump. But then I started looking into the bill a bit, and it didn't look like it'd be any really long-term lasting effects to the supply and demand market of oil right now. So again, I think that right now oil's hold on. So right now I think we're seeing oil come in. I keep talking about this third wave of selling. We're going to see this third wave of selling where oil finally tops and it brings the market down another 5, 6, whatever it is. And then that will likely lead to capitulation. Now, it could definitely not happen, but that's kind of what I'm positioning myself for and being patient for. I think there's a big shakeout in oil before we see the next leg higher because really nothing's changed. I mean, we have this small bump from whatever bill's being put forth, but that it's very short term. It's not going to change the long-term supply and demand dynamics. And that's what we need to see. And that's the number one thing driving inflation. What are we going to hear endlessly about is inflation. So my thinking is, or what we learned and what I keep bringing about this, the Druckenmiller interview was he kept talking about how we need to see CPI come in below the federal funds rate. And I think the market bottoms when we see, that inverse correlation. And I think it might happen. It's funny because I think once everyone's so scared of a recession, right? I think once a recession effectively hits, I think that is actually going to lead to a market bottom because everyone's so scared of this. It's like how the S&P finally just hit a bear market down 20%. But we've been seeing this market, past 6-8 months. It's been a disaster. It's been a bear market. It's not like we just walked into a bear market a week ago. So that's my thinking as a recession is that recession is already here because it's so talked about. So, we're seeing consumer spending come in. We're seeing all these stats that are pointing to a recession coming. But with the flow of information these days versus, 10 years ago, it's just so different. We have the app on our phone saying, so-and-so says recession coming. Elon Musk says recession coming. It's just like, because of the flow of information, I think everything happens so much more quickly. So if we get those 2 GDP quarters of negative growth, I think that would actually be the bottom, So that's kind of my take on the situation. I think we're just kind of fucked in this chop fest that eventually continues to matriculate lower until we see that inflation number top, and the numbers come in so in such large space of time, like a month at a time. We talk every day about the market dynamics. Really, nothing's going to change until we see those CPI numbers come in. So I was kind of wondering what everyone else is thinking about. When do we see that market bottom? What's gonna cause? What you're looking at to lead? There's a reason I kept talking about the sectors more than individual stocks the last few days, because I don't think we're not going to see any 30-40% breakout. We might feel far between, but like that we were seeing, where it's like, oh, this bull flag setup is going to matriculate higher from 15-20%. So right now I'm much more focused on sectors, which I started talking about China. I started talking about biotechs and solar stocks. Now, solar stocks beginning to lead is very interesting because they usually work opposite of oil. So seeing those names turn, it is as oil is turning down, but right now I'm looking for what sector is going to lead next. And it doesn't have to be this, because inflation's this way, this has to lead next. The market doesn't always work like that. So I'm much more focused on the price action sector wise, which is why I think biotechs, we might actually, once all this is said and done, in the beginning of my career in 2013, 2014, biotechs were like, you'd go crazy with biotechs. That's how I, made any of the money I started in my first couple of years making. And then it became 3D printers, and it's all these things. And it wasn't like these events happened because it's not like biotechs happened because something in the biotech sector happened or some bill happened. It was just biotechs began to lead the market, and then the news flow follows, and oh, look at this drug research and blah, blah, blah. Those things are still happening. It's just those stocks aren't leading the market, so we don't hear as much about it. So right now, my top pick for what's leading the market next is going to be biotechs. I think we do see that 2013, 2014 kind of action where it's, like Regeneron, the Biogens, and then we'll see the smaller caps begin to lead. But that's really far ahead of time. I just wanted to give everyone a kind of clue into my mind is why I'm thinking, we have to focus more on sector strength and individual stocks right now because everything's such a random mess. But I'd love to hear some thoughts. What do you guys think, will lead to a market bottom? When do you think it's going to be? How long is this mess going? Is it going to be a V bottom? Are we going to chop around for 15 years and, not make any money? So someone, give me some sort of point of view or something else, and we can kind of build on that. Come on, people. I know you got it. Or what have you been up to lately? What have you been trading? Something.
I'll kick us off now. Go on, Heaven.
No, it's all you.
Yeah, I was just going to say, for me, I've been keeping it really simple pretty much since January, just looking at the charts and even just looking at the shakedowns and just seeing like how many setups there were when I started at Trading Experts in the shakedowns versus how many are in there now. And for me, that's been like my main signal. Yeah. So personally, I've just been sort of hands off. I actually haven't traded really since January. So I'm quite lucky from that point of view that I just haven't really lost anything this year. I haven't made anything either, but I'm happy with where I'm at. So just no trading at all is the way I'm doing it, and probably will stay that way for a little while.
Yeah, I mean, I think that's really important. A lot of people want to put up the crazy gains and things like that in the market shorting, or stick to the old way of doing things, and they end up taking so many losses where you just buy breakouts. But sidestepping this action, market's down 20-25%, and you're not down anything. If you're a money manager, you're a huge winner in that scenario. Now, obviously, we're short-term traders and we don't have the same dynamics to work with as they do. But sidestepping these. Have you guys? There's a very important book we always talk about. It's How I Made $2 Million in the Market. Nicholas Darvis, and it's one of the best books I've read. And I think what his kind of take on the market, since we're not money managers, was kind of the process that we should employ. Now it's tough on our end because we're looking at the market every day. But what he would do was he was like some sort of dancer. He was like a ballet dancer or something. And he would trade the market, very wide swing trading trades. When things would come out of bull flags, he would buy them, put a stop at the end, lower the range. And, he would take advantage of the market that way. But when the market was not, when he saw those trades not working, he would just get out of the market, get away from it. So it's not like he had to be this, this generational trader who's taking advantage of every single move in the market. He's sidestepping the nasty action. And then when it's good, that's when he's getting rich. And this was in like the 40s or so. So 2 million is really like, 40 million. But, that's what I wouldn't mind seeing out of a lot of guys, especially I've been doing some trade reviews. It seems like anyone who's taking trades is mostly struggling. I've been so back and forth P&L wise. I haven't really made any serious progress. Anytime I have a couple big wins, I get a little too hyped and I find myself giving it back on some BS trade. And it's been so frustrating that it's like, that I'm like, now these last 2 weeks since we broke that range, since we broke the range down in the market, we saw those 3 drastic sell days. I'm like, yeah, we could bounce from here, but do I really want to put, like, do I really have this conviction that it's a serious bounce opportunity? Do I really think buyers are going to come back? I think we could run 10% from here, and I have no problem not having any stock for it because it's just such a guessing game from day to day. Like today, opening below yesterday's low, that really took me by surprise. I thought we were going to see a 2% gap up since we closed strong. And then it's like, I walk in today, it's like, oh, I don't care that I don't have any stock, all of a sudden. It's like, it's more about, getting your mind right, following the sectors. And, we're going to sound like a broken record on this and just being ready for when it's going to be good again. We want to be Nicky Darvis. We don't want to be, fucking Bill Ackman, because we're not, it's simple as that. Whoever, I didn't catch who was speaking before, but whoever was speaking, was it Joseph Park?
Yeah.
What you're saying was a great indicator. It's like you were looking at the shakedowns and you saw that they're just not like as feisty as they used to be. And I'm still doing the same amount of chart work, and I could probably load it up with like decent charts, but I know that indicator of seeing 40 charts out there, and I think any chart I see that's a decent chart is such a low probability setup. I'm finding so few things that I'm really like, oh, I really, really, really believe this is going to this area. So it's just so much more of a guessing game with the indices the way they are right now. So I definitely try to keep the shakedowns more like content and story heavy in the beginning and kind of macro outlook heavy, and to kind of keep almost less of a focus on the individual trading because everything's so random right now. The gap down today, I was like, no fucking way. Then I was like, why would I be surprised? So, I'm the message I'm trying to convey is kind of just stick to the script. Keep doing the chart work. Keep the fundamentals, if you will. Like keep shooting foul shots every day. Type up 100,000 charts, whatever that is to you. There's just I don't see much of a reason to be too trade happy right now. I'm just not seeing it. I like this LNTH. I keep looking at that. I think that's a good short. But it's like, the amount of charts I looked at to even find this trade that is a decent trade where, a year ago, this probably would have even crossed my radar because there'd be 500 bull flags I could have bought or such, like easy looking trades versus I'm like, this one, okay, it's kind of failing the 50-day moving average. It looks like a topping pattern. It could work out if this and this happens. The trade ideas right now are a lot, you gotta really talk yourself into these things. And the other flip side of the coin is if you're taking these day trades, mentally, day trading sucks. I hate day trading. Like even when I do well, I'll look at it and from a standpoint, and you have to be so much happier about such a BS win, such a coin flip win. I had a win a few weeks ago where I was looking at it, it was like June 7th, and it was when the market, we were in that flag before that huge 3-day sell-off. Here, I can share my screen. I'll get this out. All right, shit. All right, so on this day, right before the flag breakdown, we opened at the bottom of the flag. So I bought the shit out of the market. I had like a ridiculous position on, And I was like, you know what? This seems like a high probability day trading setup. I bought fucking 1.2 million of the SPY, sold it like 6 hours later. And I had this ridiculously tight stop and it worked out. And I was so pumped. And then what happens is we break down and, we have this pretty epic sell-off in the next few days. And I'm looking at this thing and it's like, one, am I missing the forest for the trees, being so tightly wound up by a day trading setup, it's like, I don't need to be buying that much of the SPY or anything for something that has, a 5-10 minute stop, so I took the win and I was very happy with myself and I had nice P&L in the trade. And it's like, right now it's like any P&L you can get, take, but how often do I want to put myself in that setup from a career standpoint? Not very often. Like that is, I look back on that, it's like, yes, a good win, but now looking at this one candle, it's like, why am I putting so much risk on the table on that single day for this bullshit setup? Because, if I tried to take that setup 2 days later, when it touches the bottom end of the range again, what happens? I am super smoked and then I'm super upset and my mental capital is ruined, and on and on and on. So, right now what I'm trying to do is see the forest for the trees and kind of have that, take a step back, not try to day trade every day and just, get ourselves ready for when it is time. I was kind of upset with myself that I missed and I kept talking about all these Chinese names that bottomed and went crazy. Obviously, these aren't the type of charts we're going to gravitate to, but every single Chinese stock looks the same. They have this May 12th date, whatever the hell happened on that day, and then they started ripping higher. Those are the things I want to be focused in on, even if I'm not trading them. That's where I want to keep my focus. So I'm out here rambling. Yeah, I mean, what are you guys thinking? Where's your focus been? What's up?
So I kind of was doing the same thing where like I would have a good day because I put on a shit ton of risk on like a day trade move.
Right.
And then realize that that's like, you can't really do that because like you said, again, it's not a repeatable process.
Right.
And then you kind of get smoked like the next day or even on the next trade that same day. So I honestly haven't really been home for most of the day for like the last 2 weeks. I've been out working with my parents, but today I was home and stuff. And like, so any sort of like smaller time frame plays that I'm doing, I'm making them a lot smaller. Even if I believe in the trade, I just am reducing my risk a ton because it doesn't really make sense to load up on these small actions. Because in the end, when that big action comes, I'm going to completely miss it if I do that.
Yeah.
So that's why it's like, if I am small in that day trade and then it can actually turn into a swing trade that I can see on the daily chart, I can then add to it, and then turn it into a proper swing versus like trying to get too stressed out about a big day trade and then, get shaken out of something stupid. So yeah, that's kind of where I've been. I have no idea where the bottom is. I don't really care. It's more so that I'll be ready when it does happen and it's obvious that it's there. You don't have to be the first one to it. Anyways, most of the people that are the first ones to it are usually the first ones out of it too. So,
right.
I'm just taking it day by day. And if I do take anything, like I said, just shortening the time frame, practicing, drawing those intraday levels, and then just sort of watching them, seeing how names react to certain things and in relation to the SPY and the Qs, how are these other names moving, and just little things like that, just kind of sharpening my tool belt in like other aspects versus just trying to swing trade and trying to repeat and do the same thing that I would do in the bull market.
Hell yeah. Definitely the winning combo there. And I'm trying to do the exact same. Something that really resonated with me, which was like screaming at me to take kind of a step back, was, and I'm going to short this LNTH below 60, but as I said, take a step back. Well, no, I just have the sell stop. I'm watching it. It's like starting to tick lower. Market's ticking higher. This thing's ready to drop. The thing that really resonated with me was I keep talking about this Druckenmiller interview, and he had that horrible year in 99, 2000. And I guess, you could say what we've experienced in the last year with all these crazy growth stocks dropping 80%. It's very similar into the .com thing where he, at that point, he's 20 years into the game. He's managing billions of dollars. He's like, the top dog. He's these two little guys under him who are just murdering it. And he's not. And he's trying to short against them. And these guys are making so much money. So then he finally is like, fuck, capitulates, flips it, goes long 10 times the amount he's short, and marks the top and like loses a ton. He almost quits the business. But then he takes 4 months off. He takes 4 months off and doesn't look at the market for a second. No papers, no checking in. Like even just sitting here looking at that would be more than he did over a 4-month span. He comes back and after 2 weeks puts on the biggest trade of his career and ends up making 40% over the next 3 months. And he kept saying over and over, if I didn't step away from the market, I wouldn't have the balls. I wouldn't have. Oh, gotta admit, hold on. I wouldn't have the balls. I wouldn't have the confidence. I wouldn't have the gusto. I wouldn't have anything to put on that type of risk. So that just hearing him say that, a guy who's one of the best of our time, it's just like, we should not be pushing ourselves right now. We should be focusing on sector strength. We should be seeing where the money's rotating, but we shouldn't be in the weeds with these day trades, like going nuts, and from a business standpoint, where it's like, I always want to have trading experts chat going crazy and people talking about ideas and things like that. And it hasn't been, which bugs me a little bit. But then, again, stepping back and seeing the forest for the trees, it's kind of good that it's not right now because, it's just a recipe for disaster. It's much more of a casino than it was the past 3 years. Like it's just today's gap down was all I needed to see. And that, we closed so strong yesterday. We were held up. Yes, it was lower volume, but it's like very, very tough to put on like a market short in this area. So it's just not worth playing the guessing game as much. Yeah, I mean, so I just wanted to get those few points across, get a little touch in with everyone. I'll try to do these. I know Heaven and Bennett have the one on Mondays, but that was leaving me without getting any touches with the homies. So I'm going to try to keep doing these throughout the week, and everyone gets little contacts with all of us. That's really all I had to wrap up. Is if anyone wants to chime in, any questions, any thoughts, anything different from what we've been saying, let me know. Otherwise, I'm going to wrap this puppy up.
Good. Thanks for doing it, Shake. Appreciate it.
Oh, of course. And hey, thanks for joining, guys.
Actually, hey, one more thing, because I saw on your
what's up, boy?
What up, dude? I know you called out like the whole Chinese stock thing, but it was funny because literally the day before that, like all my coworkers are all Korean, they read the Korean papers.
We need that intel.
Yeah. So it's funny because like I'm trying to follow obviously news on the state side, but out in like the Korean side, their articles, I think there was articles saying how, we all know that China's, lifting some of the tech restrictions and so on and so forth. That came out a week ago, but now I think, they're actually trying to, it sounds like they're lifting up some of the COVID restrictions. So like they're easing up a little bit.
Right.
I haven't seen that in our news here on the American side, but I'm wondering if now we're going to start seeing some tailwinds in the China names, I mean, obviously they got destroyed and hammered, and I don't want to be a sucker trying to call bottom on these names, but it's funny because you called out kind of like how the action looks on some of these Chinese names. So I'm just trying to take information one bit at a time, and like maybe these are going to start coming back in play. But who knows, I just have my eyes on it. I don't want to like be too eager to like try to jump in and like play these like tough action. But that's just kind of something on my side that I came across,
Yeah. No, I mean, that's why I was trying to point those names out, because it was funny. It's like the broad market was getting destroyed, and these things, which you would figure would be getting dumped the worst because they're just, so in the can and no one really wants to put risk on these names. But, as a sector broadly, they all started moving higher. So that really got my attention. I was definitely very late to the trade. All these things are, they started bottoming like a month ago. But, if they want to turn the corner and disconnect from the rest of the market, I think that's something we got to take note of. So that's why I was very, very intent on these Chinese names. Yes, most of their charts look like shit, but they've just severely disconnected. It's going to be a while until we see, unless it's like an oil or energy name, the top right, beautiful bull flag, like the momentum trades. We're a couple earnings seasons away from that in my eyes, unfortunately. But there are sectors like these Chinese names and solars that are moving well. So, definitely want to take notice of that. And definitely need that intel of the fucking Korean market. Damn, the fuck.
We'll see. And then another thing that I know you were calling out, like how we're gonna have to keep our eyes on like the CPI and the inflation numbers, but also kind of to dive into it a little more in detail, you know, at least I'm hearing, and I'm sure everyone else is hearing, like the layoffs are already happening, right? And we just
Yeah.
need the second quarter to come in. And I think once that comes in, it's just, you know, I suspect, I'm thinking maybe we'll see some kind of action in terms of like a base maybe, and then just CPI numbers hopefully could just kind of coming down a little bit. But I'm just trying to watch those things mainly, you know. I know it's like, oh, like layoffs, like blah blah blah, but it's already happening. I mean, even our contractors, you know, in the apparel side, it's the orders aren't coming in for like the big box retailers. They already loaded up. I don't know, maybe it's like their hedge on inflation, but they're trying to load up right now. Same with grocery stores. I just found out 99 Ranch, one of like the biggest West Coast Chinese markets, they're loading up on non-perishables, and that way they can be protected on, you know, the future, because all their costs are going up too. So they're loading up right now. They're just bought into. They said their warehouse, their 3PLs, they're all slammed to the gills right now. Like they're loaded up in terms of like inventory.
Yeah. Do you think on the apparel side, they're loading up now because they think, you know, inflation and supply chain things are getting worse and their cost of shipping everything is going to get even higher? So it's like, might as well just get it over with now.
It's so hard. It's 50-50 right now because, you know, like apparel's seasonal. There's seasonality in it. So I think what some people are doing is they're trying to secure fabric because the cost of fabric and cotton obviously has been only going up. But, you know, they order about 3 months to 6 months out. So we've been busy as shit for like the last half year, for like the first half of this year. But in terms of new orders for like the upcoming seasons, it's slimmed down. I know some sewers who have laid off a few people on the line. So that's kind of what we're anticipating and what I'm seeing so far.
Huh.
That's
good information. I mean, that's really good information right there. Yeah.
I don't know, but see, the thing is now, I don't know if it's hit the tape yet. You know what I mean? Like, I don't know if because usually prices, like at least big money in the price, like they already see this stuff months out. So I don't know if this is already baked in or, you know, whatnot. So I'm just trying to like, it's just hard to tell right now.
Yeah, no, I mean, you're talking about layoffs, and I think that's a you know, kind of a great topic to touch on, where I have a bunch of friends in tech who work at like Google and work at these other like, you know, private equity firms and things like that. And they're starting to see it big time. And they're talking about, I was talking about how a few weeks ago, the Google CEO like had this like all hands on meeting where he's like, this recession is coming. Like we are going to see something we haven't seen in, you know, 10, 15 years at least. And it just kind of seems like, you know, all the big companies are warning about that, but we haven't seen much of the layoffs yet. We've seen a little bit where it's like the smaller tech companies will talk about like the Coinbase and things like that, where just, you know, crypto's so in the gutter that they're kind of they're crushed right now. But the bigger companies, you know, it seems like it hasn't happened yet. And then once we see that happen, I think there could be some more dominoes, you know, following that. But you know. But I think once that happens, you know, that would lead us a lot closer to the bottom. But I also think it cascades a lot faster selling. You know, I think we could see what we see last week. We saw like those 3 days that were like 10% drop. Like I think we could see some more stuff like that later in the year. You know.
Yeah, we haven't had any circuit breakers this year yet.
No, yeah, which is funny.
The COVID drop was when we had some circuit breakers, and like that's when things start to get really scary for people. And like from what I've noticed in my experience is like you can't really have a crash if everybody's watching, because you know there's no car accidents if you're paying attention.
Right.
You know? So if you're paying attention, you're safe. But it's when people feel like they're safe is when the most accidents happen. So like for a crash to really develop, it's like that no one needs, or most people have to not see it coming. And I feel like right now everyone's just like, we're in a recession, it's coming, we're crashing. Like that doesn't work like that. So
that's the funny part about why I thought we would be seeing greater market bounces, because it seems like everyone in the world is the most bearish I've ever seen in my entire life. Like when Bennett is sitting there going, let's not go to work for the next 6 months because we're just going to get like, that's when you know. And it's just like, and if we look at historically, like 2000, 2008, they both had 4 like massive bounces. between 15 and 25% in the SPY, 4 times each. So a total of 8 between the two, of 15 to 25% market bounces. So, but we haven't seen any of that. Like the one bounce we got like a few weeks ago that just ended up being a greater sell-off. Like that was just like a little tiny trap to get some longs in. So that wasn't like a true, bear market rally. I guess it was technically, up 10% off lows, but it wasn't very inspiring. It just made it seem like more selling's coming. Yeah.
I'm zooming out on like the yearly for the SPY, and we finally hit like that candle where it like just kind of tapped below last year's low on that 363. But I just kind of like what Heaven said, like, how we haven't had any like violent sell off. I just want that shit to just come, so that we can get over with this and move on.
Right. Yeah. It's like, just stab me in the chest already. Just get it over.
Yeah,
with.
just give me the pain.
Yeah.
Let's go to 340, 340, 350, and let's move on,
This market's what do they call it? Chinese water torture with the drops. It's every day.
Yeah, one little drop on the forehead.
That's it.
Yeah.
Every day is another drop. Today's gap down drop.
Right. I'm just taking it like, obviously, I probably am the most guilty of trying to take crazy low probability trades, but I'm still alive. So now my tune, obviously learning the hard way is just stay alive, like don't run out of ammo for like the good times. But now it's just like, okay, like at this point, even the action, like kind of like what you mentioned, Shake, like it's so difficult to have any edge in terms of like a swing. Even that of a day trade is just kind of crazy,
Right.
Now it's like, all right, take a step back. But I'm just now mainly watching because I just feel like the price action's been following what we're just seeing on the headline, like the global markets, or like the global economy. And I'm just watching those 3 things: CPI, Russia, Ukraine, oil, right, and China, because supply chain. So those are the 3 main things. Unless I see a sliver of like a kind of tailwind, I don't know,
Do you think China opening back up is going to help the supply chain substantially, or just kind of a blip?
I don't know, man, because right now we're seeing like Biden talk about easing up tariffs on like the solar names, right? But solar is not going to be the cure for our energy prices. I think it's just like a tiny smidge of Band-Aid. But I did see the article about easing up tariffs to hopefully like help the inflation and reduce costs. So that's another tailwind for China, I suppose. But I don't know how much that'll help. I'm not an economist by any means, but
boots on the ground, though. You got some boots on the ground. That's more important than an economist.
Yeah, it is probable. Like in terms of the factories right now, like ever since the tariffs did hit, a lot of people did. China is actually expensive now relative to other countries. Like we're sourcing now, like Honduras,
okay,
Mexico, more South American countries. But there's things that China can do that like a lot of these other like countries cannot do. So we're still very dependent in terms of apparel, but I don't know if it does open up and tariffs do alleviate. I don't see why more trade, especially on our side, wouldn't happen. We still source raw materials like dye stuff and like chemicals from them. So, but it's just like such a small piece of like the bigger picture. Oil costs, transportation, like freight is insane, but even freight is getting crushed. My boy works at one of the biggest booking freight boarding companies, and he said that he was killing it 2021.
Yeah.
Come 2022, he said bookings have gone to shit. And it's so funny he mentioned that. Oh yeah, dude, like I was watching the Zim, right? And he told me this around, so I pull up Zim because I was like actively like in and out of this name. He tells me this around, I want to say kind of like, it was before the earnings report. It was around like beginning of May. I talked to him, he's like, dude, like a lot of these 3PLs and Amazons are like slammed in inventory. They can't take it anymore. And not only that, shipping costs the demand has kind of fizzled because of that, plus cost of transportation. And I'm like, so you're telling me these shippers are going to get slammed, even though there's like, because like literally 4 months ago, you were telling me you guys were
Yeah.
killing it.
Yeah.
He's like, yeah, he said it literally just, the tune changed like overnight. And then so earnings hits, Zim is still like just trending up, like it's kind of buying up. And then I don't know what happens, but on this June 8th, dude,
Yeah.
fucking just sells off back to this like base or back to this low where it's like this 47, 48. And it's just kind
It
of
still looks
crazy.
like it's gonna die. Yeah, I'm gonna cut you off. We only got 2 minutes. One of the things that it's funny in the Druckenmiller interview, he was talking about, they're like, what do you think's gonna happen? And he thinks one of the things is global trade over the next 2-3 years is gonna be a mess. It's gonna be a disaster. And the second thing, he's like, these ocean shippers are gonna be the easiest shorts because they're just such one-time events. It's like, all of us missing like the Peloton shorts and things like that when COVID stopped. It's like when you look back, it's like, well, fucking obviously, So it's funny that you mentioned shippers, and he said that too. But we got a minute left, so this thing's gonna cut us out. I'm not upgrading a Zoom in this economy. Recapping a little bit was, we're gonna be in this mess for a little bit. All eyes on CPI. It sucks to be a slave to these economic numbers. That's the case with the market right now. This bear market's gonna rage on for a little bit. Definitely want to save that mental capital. You want to put that energy into positive things, whether it's reading market books, whether it's having side projects, things like that. We want to be focused on relative strength like a mother as much as we can, but it's not as important right now because we're not seeing great market turns. Like this isn't a great market turn these 3 days. So keep the faith. Better times are ahead, but this summer is probably going to be pretty tough trading. We're going to keep engaged as best we can. I'm going to do as many of these meetings as I have to. But yeah, I mean, don't burn yourself out on day trades. It's the only thing I'm going to say, and focus on the long term. Nikki Darvis, that's who we want to be. Right now, it's ballet dance time. Okay.
Let's go.
There you go.
Let's
Do it.
go.
There you go. That's the perfect
guys.
ending. I'm sending you guys off on that note.
See ya.
See ya.
Thanks, Shake.
Guys, see you guys later.
All right.